All right, welcome to my daily review. You're looking at a daily chart of the Nasdaq, and you can see today we gapped lower. I mentioned yesterday this inverted hammer candle here, which usually leads to lower prices. We saw this 3 in a row here recently, and today it gapped lower. So it kind of broke from the this choppy area, but it's still within this trade range of 13,161 and 149. I know it's a 1,000-point trade range, and there's a lot of gains and losses to be made within 1,000 points on the Nasdaq, but that's where we are, and there's reasons for it. And Jerome Powell certainly is responsible for today's action because he said he was confused and about the economy, how strong it is, and he's said higher for longer, which is not something the market wanted to hear. But at any rate, during a correction like this, there's a couple things. We don't know how low it's going to go. It could certainly break this 13,161. We don't know how low it's going and how low it's going to go, and we do not know how long this will last. I mean, we don't know in duration how long this will last. I'm thinking that September, couldn't be much worse in October, but it might be. You never know. But I'm a big believer in seasonality, and I think that once we get through this month and turn the calendar to October, things will get a little better. So yeah, Powell's confused. He mentioned uncertain, and their investors, they're going to sell first and ask questions later on something like that. They don't want to hear they don't want to hear an uncertain or a confused Fed chair. They like certainty, and when you have uncertainty, they just, like I say, sell first, ask questions later, and that's what we saw today. Also, with rates going higher, the 10-year and the 2-year, the multiples contract. So you saw a broad-based selling today. Everything just went down a notch as the rates go up a notch or two. That's just multiple contraction, and we saw that. That's what 2022 was all about. Multiple contraction. As Jay Powell was raising rates, I think about 11 times in a row, we saw this 37% contraction in the index. Okay, that's a lot of pain this guy inflicted on the markets. But then it made a bottom and then ran higher because it seemed like they're at the end of their rate hiking cycle. And now he's confused and he's uncertain, and it's just I think he's doing it on purpose. He's not a dumb person, so he doesn't want the markets to go higher. I haven't heard him be bullish in a long time because a stronger stock market is inflationary, and that causes more problems for him. He wants a higher unemployment rate, a weaker job market, and a weaker economy. So and a weaker stock market. So he did what he wanted to do, trust me, on this action today. So all we're looking for is a reversal candle, like I said, something like this pink rally day, or even a bar. I'm going to go ahead to ELF because I was watching ELF today, and this is the type of candle that you want to see here, where you have this you have this inverted hammer here, and the next day it sells off, gaps lower, and it looks like it's going down to $80, and all of a sudden it reverses and finishes with a hammer. And that's what you want to see, not an inverted hammer. We want to see a hammer candle. And so that's what I'm looking for with the index. You just got to be patient, have discipline. This is going to happen eventually. The market's super oversold. Of course, it can become more oversold. And I might get to that in a little bit. But I'm going to go back to the Nasdaq here because I just wanted to show, it's spend some time on the index today, because I could go through a ton of charts and they're all pretty much looking the same. So anyway, the Nasdaq in the month of September, I've been talking about this, I don't know, it seems like the whole month, is down now almost 6% for the month. And I showed you the at MC stock charts, we showed you the seasonality and how it's performed in the last 5 years, and it's pretty much in line with 5%. Last year was 10% down, but 5-6%, that's kind of normal for September recently. I did want to show you the Russell too, because the Russell is a more risky smaller cap a risky index along with the Nasdaq, which has the growth stock. So these are the growthier indexes. They're going to get hit as rates go higher. And of course, the Dow Jones is only 30 stocks, but those are more insulated because they're, they have a lot of earnings and they're, bigger stocks and they're more liquid and they're not going to crash like some of the growth stocks just because the rates tick higher. And the other one is the S&P. It's 500 stocks, but you can see that one's held up a little better. It's down nearly 4% for the month, though. So that's some damage. Anyway, just wanted to show that to you. This is where we're at here in September 21. We still have 6 more sessions to go in the month. And you just got to hang in there. If if your system like mine did just kind of force me out of the market or just force me to trim some stocks that I really don't want to sell, but that's, you got to do what you got to do and raise cash, and I just kind of wait it out. And I'm going to go through the grade 8 or the divine 9 or whatever you want to call it. Just take a look around, and you can see Apple was down. Hold on a second, I got to go back because the Nasdaq. I got to say this: the Nasdaq was down 245 points, 1.82%. Okay, so when the index goes down nearly 2%, you can expect your growth stocks to go down 3, 4, or 5%. That's totally normal because when they go down, they're going to underperform the index or to the downside, and they're going to outperform to the upside. Anyway, now that I said that, Apple just still consolidating within a base here. 171.96 is that low when it's tried to retest it today. I was watching it. It showed a little bit of strength, but close. You could see there at the just near the bottom of its daily range there, 173.86. Closed up 7 cents off that. So yeah, not a great day for the Apple longs. Microsoft held up a little better. It's looking a lot like Apple. That 311.55 is a point of interest here, but until it takes that out, it's just still consolidating in a base. And these stocks could certainly, and so can the index, make this, a double bottom type of pattern. I'm going to get to the patterns here in a minute because I've been talking about how short these bases are. And double bottom would be, kind of ideal for longs. Give it a few more weeks to sell off before we start building the right side of bases. Meta sliced its 50 today, not ideal. Still pretty strong stock, only down 1.3%, so it outperformed the Nasdaq. And you can see it closed 2.2% below its 50. Not ideal, like I said, not ideal that these stocks are starting to give it up. Tesla sliced its 50 as well, near the bottom quartile of its daily range, and it closed right at its 50. How about that? Something to watch for the coming sessions. Tesla held its 50. NVDA looks bad. Had a big year, and when it had this move from 403 to 502 and had this earnings report and sold off on good earnings, stocks, top when the earnings look the best. So I'm not saying this thing topped or it's done or anything, because it could certainly do, the double bottom pattern, which I talked about earlier. But I will see. We'll see with NVIDIA, but it does not look good. Way below its 50 now, 9.7% below the 50. So that has a lot of work to do. Google, which was the king of the stocks, and this one pulled back to its 50, just like Tesla, in fact, closed a tick below it. And then Amazon, talked about these bases being too short, and now it's traded below that 130.58. So this is what I'm talking about, maybe a double bottom pattern. The first wave of sell-off, then pushes back up, and then another wave lower before resuming. So that's what I'm looking for with these stocks. And they needed more time. I've been talking about this for a while now. These bases are too short. I'm going to get to some of these stocks here in a minute. Anyway, that's enough of the grade 8, magnificent 7, divine 9, or whatever. I don't want to go through all of them. I did show you the ELF chart because I don't want to be all negative here. Actually, I'm going to start with the negative. Sorry. I'm going to go to the negative. Pretty easy to find negative. This is IoT. I don't understand the infatuation with this stock. You can see this double bottom here, which failed. You can see this pattern pretty clearly, the green line, and it looked like it was going to move, and then boop, no. But it has no earnings, no cash flow. So those types of stocks, they're going to get hammered. C Limited, this was a 2020 darling. This thing just sliced its 50. This is what I'm talking about. Stocks that slice their moving averages, trade down, take forever. This must have been 3 or 4 weeks just to trade up to the 21 and just get pushed down like the bully pushes down the kids in the schoolyard. And that's what happened to SE. But there's just a lot of stocks like this. IONQ, this one's had a big year. But this one, once again, maybe you'll make a double bottom here. Who knows? But it definitely had this short consolidation, right? And what happens in these short patterns? This one failed. You can see all the big volume selling bars. So people are taking profits in that one. SMCI, same thing, just profit taking. Sliced to 50, took forever, to lollygag along below it. Then all of a sudden it got pushed down. Traded up to its 21 and it got pushed down, and then gap lower today below that 235. So Supermicro is looking tattered, a little worse for wear there. With SMCI, there's a lot of them. I don't want to do this. I could do this all day. A lot of stocks just going lower. Okay, so stocks go lower. You just keep watching them though, and when they start reversing, you can buy your favorite stock at lower prices. I'm going to go back to Amazon. Would you rather buy Amazon at 140 or 143, or would you rather buy it at 125, or maybe we'll get it down here at 126 if it retests this low here, which I think it will. And I'd rather buy it $14 lower, or whatever, $17 lower. So just hang in there, relax. This is not the end of the world. It's just a little multiple contraction due to the Fed, so it's not that big a deal. Stocks go up and down. Okay, the other one I had on, just a couple that I had on the list for short, just to watch for shorts, just some feedback on the shorts. And obviously this one was down 3.53%. This is Deckers. You can see it sliced to 50, lollygag below the 50, and then got pushed down. And then the other one was Palantir. And this one, similar to Deckers, just sliced to 50 and takes forever to get back up there and just gets pushed down. Good volume selling today, down more than 5%. So congrats to the shorts there. They're going to cover at some point and have to buy that stock back. And that's just the nature of the beast. Okay, I did want to show you ELF. I already did, but I'm going to show you again. This thing was punished, and I talked about this, the short consolidation. This thing had not based since July. I think I show you this chart every day, this July pattern here. And it ran forever and a day, and now it's tired of running, so it sells off. But this is a reversal candle, and this is what I'm looking for in the indexes, the SPY, the Nasdaq, the Russell, something like that, where buyers show up and say, hey, enough is enough. It might be short covering, whatever. It stops going lower. The thing about ELF that bothers me a little bit is this gap here at 86.71, which is really not that far. The way it's been selling off, 86 kind of coincides with that 200 there. So we'll see. It doesn't have to fill that gap now. It could just certainly, form a base and rally higher. So we'll just take it one day at a time. That's all. ESTC was up today. I'm going to show a couple with some strength. I showed you the negative. Going to go to the positive here. This went up. See, it gapped higher, much like Splunk, pulled back to its 10, which is kind of the opposite on the short side when you breach the moving average and then rally back up. This one goes higher, then rallies, sells back off and forms this like bull wedge pattern back to the 10. So that one went up on the SPLK news, which Cisco bought Splunk, pretty similar patterns there. Rallied up on earnings, pulled back to a moving average, and now gapped higher. Congrats to the longs there at Splunk. Cisco, man, when John Chambers was there, they were buying a company once a month, and it's good to see them get active again. And you would expect that, that since there's M&A in the sector, that the sector would rise, but it wasn't the case because of the, the Fed and the rates going higher. These stocks just got hammered. Oracle down 3%. MongoDB is in the same group, down 5% and breached the 342. So that one might have to, I don't know, close this gap here. 294 is a long way to go, but it's looking like, you know, I think we're going to get a lot of these, you know, double bottom type patterns here. Whoosh, come down, maybe fill that gap, and before bouncing higher, hopefully for the longs, right? Not a stock that I own, but definitely one that I watch. CrowdStrike is one that was on our ready list. Really like this stock. It just it pulled back to the 21, which is great, right? It was down less than 1%, while the index was down, you know, nearly 2%. So, you know, it outperformed, but you know, it's just a tough market. You know, you like to see stocks holding their moving averages, and this one held its 21 today. So that's a positive. Novo Nordisk, it did sell off 3%, but it's still in this trade range here. You know, to me, this 90 to 100 range, it just split 2 for 1. So there's a lot of people, you know, selling. If you got twice as many shares, it's really easy to just cut loose half of your lots. So yeah, just once again, it's too short of a base, you know, to really, it needs more time. These things need more time, and I'm going to get to those in a minute. VLO is another one that was up today. Very strong move. Some of the energy names that were up. MUSA, it's a retail with an energy component. Had a nice day, made a new high, closed a little bit off its low, which reminds me, where's Casey today? Okay, not bad. That's pretty good. Only gave back 1%. HCC, some of the coal stocks were hot again today. The energy coal stocks. This is Warrior. Come on, Market Smith, help me out here. Don't do this to me. I'm going to have to cut my video short. Okay, you're going to take my word for it. Warrior was up today. There you go. Bounced off its 10 EMA. AMR is another coal stock that, okay, if it's going to start glitching like this, I'm going to have to cut this video short. You know, made a new high yesterday, pulled back, still well above its 10. So these stocks are showing strength. This is Marathon Petroleum, which is another stock that, yeah, take my word for it. It was up today, and I'm going to have to shut this video down because Market Smith is just showing glitches. So anyway, a couple other ones that I did want to show that, you know, performed, you know, okay. But I'm going to stop it right there. And gosh darn it, I hope it stays with me here for a minute. Okay, yeah, I'm going to go through these stocks that just had these short little bases, and now they're failing. And it's not the end of the world. You hang with them, you watch them, because you know, these bases, even though they failed now, just need more time. I've talked about how much, you know, they need more time, and this is one of them. Amazon is another one. I showed Amazon already. CDNS is another one of these, you know, computer software, needs more time. SNPS, you know, just this one had a little longer base, but still, you know, below its 50 now. So they need more time. ACLS, a semiconductor equipment stock that I like, and it had this short little base. So like I say, I think we're probably going to get some double bottom bases here pretty soon. So this is Carvana, sliced its 50 today. That's a short little base too for that one. DraftKings is another one. You know, there's a lot of them that look like this, the short little bases that failed. And I've been showing you these for a little bit now, and I was concerned about these bases. And now this one's below its 50 energy stock. So even though energy was hanging in there today, a lot of them did not. Anyway, that's it for me, except for I lied. One last thing, as Steve Jobs would say, one more thing. Victoria's Secret, whoo-hoo, up nearly 2% today. So we have a winner here. And this one's showing you know, bottoming pattern here. Stage 1 base here. It's definitely one that I'm going to watch. Still down 5% for the week, but today this is strength in a weak tape. So let's give it up for Victoria's Secret. Anyway, I'm just kind of clowning around. It's just a time for you know, just watching, observing, and still staying engaged, but certainly not being active trading in this market. Anyway, at MC stock charts, we never give up.